Right. So welcome back. We're going to get started, Lama, with unit number 7. The unit itself is called Money and Banking. The unit is divided into certain parts. I will run through the parts as well. It's not very hard, but it's a bit hard, like I said before. So this is where the grade 13 syllabus starts. And I'll first tell you, Lama, I'll give you an overall picture of what unit 7 is about, and then we'll get started. So unit 7 is ideally broken into around 4 to 5 sections. The first section of unit number 7 is about Lamai money. So here there is some initial basics that we talk about. What is money? What are the characteristics? What are the functions? We talk about something called demand for money, money supply, high-powered money. There are some different concepts. So the tune for this money part, the PDF version I shared on the WhatsApp groups. Since some of you all don't have the printed tute. So until page number 1 until 8 is this part on money. That's the first part. The second part of this unit, Lamai, is on inflation. So what is inflation? Inflation is where prices are increasing. So we'll talk about the different types of inflation. What are the reasons for inflation? Right? So many different things. We'll talk about that. That's the second part. Then the third part of this is, Lamai, about the financial system. Right? So Sri Lanka's financial system, the financial instruments that you have, the financial markets, the different financial institutes, all of that will cover. It's a pretty much small area. And then you have the next part about the central bank. Central bank and monetary policy. That is a very interesting, very practical part that we will learn. Central bank and how they use this monetary policy to control inflation, to control the economy. How do they use that? And then finally, you have, Lamai, the fifth part, commercial banks, and something called credit creation. So com banks and credit creation. So this is the 5 parts that you have, Lamai, for unit number 7. You have money and bank, the money part. You have the it's much more tougher than BS though, right? You have money, you have inflation, you have the financial system, central bank and monetary policy, and commercial banks and credit creation. There is a bit of calculations also, especially in the last part, commercial bank and credit creation part. Now, my target is to finish off all of this by the end of November. Today, we will be able to do half of this. Half of this money part is what we will be able to do today. Next class, we should be able to finish off the money part. If we have some time, next class, we will start inflation. If not, it will be the class after that. Okay, right. So that's how unit 7 is broken down. And in terms of the number of questions that you get in your A-level paper, Lama, you get roughly around 4 to 5 MCQs from unit number 7. So 4 to 5 MCQs, that's around 8 to 10 marks. And you also get one entire essay question. So essay question number 6 in your A-level paper. In paper 2, so this is paper 1. In paper 2, you get question number 6. So that is 20 marks there. So roughly in total, for the entire unit, you get around 28 to 30 marks. So out of your 200 mark paper, 28 to 30 marks come from unit number 7. So it is a very important unit. I would say it's one of the biggest units, or the biggest unit itself of your grade 12 and 13 syllabus. That is that. Now, 7 and 8 is not connected, Lama. We'll come to 8 when we go there. Okay. Today's class will go until my class time, Lama, I am extending the class time a little. So from October onwards, you had classes for 2 hours, 7 to 9. I made it 7 to 9:30. Now I'm making it from 7 to 10. So from now onwards, you will have 3-hour classes. I will give you a break in the middle. Don't worry. That is how the class will go. Maybe today's class might not go until 10 itself, but that is the rough timing that we will have. The money and part, Lamai, there could be small things that you're learning business studies that can help, but it's much more advanced than that. Maybe today's initial part could be something that you would have learned in business studies, but later on, It's much more advanced. Okay, so we'll start. Now, I want you all to pay very close attention. Listen, at the end of today's class, we have a quiz. So we have a quiz with around 15 MCQs, an interesting one. I'll give you something to the winner as well. So all from what we are learning today. So pay attention, listen. Good. Okay. Central bank report number you can get, I'll let you know when you can. Okay. So we'll start with what is money. We say money is anything that is generally accepted as a means of payment, as a method of payment. Something that is generally accepted is what you call money. Now, I'll give you an example with this. So let's say, in order to come to this class, in order to me to give you this class as a service, as a means of payment, in return, you give me money. So anything that is accepted as a means of payment is what we call money. So if you want to get anything, in return, you have to give something. What do you give? You give money. That's what money is. So we say money is anything that is generally accepted as a means of payment in exchange for different goods and services. For you to get any good or service, you can give money. Then what are the characteristics seen in good money? So we'll quickly go through the characteristics, not that hard. One is money is generally accepted. So no one will reject money lamai. So if you want to, for example, if you want to come for this class, I can't tell you, no, don't pay money, you give me, let's say 5 apples. If anyone is paying money, it will be generally accepted. No one will say, no, I don't want money. Can you give me apples? Or can you give me, let's say, a car in return? You can't do that. Money will be generally accepted. And the next characteristic of good money is money is durable. Now, how many of you, I'll give you an example for this. Now, these lines, I'm not giving you a note. You can write anything if you all want to. So, how many of you all have had this good experience where sometimes in your pockets, right, after maybe in your school uniform, denim ekaka somewhere, your denim has gone into a washing machine, all of that washed, and all of that 1 month later, you take out this denim and you realize there is some money in that pocket. Have you had that good feeling? Yes. Have you realized all that money that went into the washing machine, that went out there to dry in the sun, after all of it, it is still very usable? Have you all realized? Nothing has happened. Have you realized? Have you realized now the same thing if it happens to a normal piece of paper? You all would have had different pieces of paper in your school uniforms and all. Have you realized? After it washes and come, it's like a white color guliyak. You have like a white color, sometimes you get kudu 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 kudu, white color paper. That's all that you have. Whatever written is gone. There is nothing left, right? But money is not like that, no. No matter where you put it, it might go inside the washing machine, to dryer, to sun, to here, there, to no matter where. When you take it back, you can use it all over again. No? Maybe you might have to put the iron it if you have to, but you don't really have to. So that is what you say, my durability. So if you take money, it's made with a special type of paper. It's not like our normal paper that we use to print tubes. It's a special different type of paper that we use. That is durability. And then, yes, there are so much of things. You have lamai uniformity. Now, what is uniformity? Uniformity, it looks the same. So all the 100 rupee notes look the exact same, no? You will not have, for example, different looking 100 rupee notes. You have all the 100 rupee notes out there looked exactly the same. Some of our money are printed in Sri Lanka, some is printed abroad. It's not very clear where exactly it is printed. Okay. So it's the exact same thing. It's very uniform. You will not have, for example, 100 rupee note will not have, serial numbers will change, but you won't have, let's say, 100 rupee note in different sizes, different colors. You won't have. All the 100 rupee notes will look exactly the same. And then the next character is it is divisible. What does that mean? Divisible, you can even pay any amount with money. So let's say, for example, if you want to pay 2,659 rupees, you can pay. So you can pay it with 2,000 rupees, a 500 rupee, 100 rupees, some coins. So any money out there, any amount, you're able to pay with money. So you have the proper set of notes and coins to pay any amount. That's what you call my divisibility. So even let's say if you want to pay 2,569 rupees, how can you pay that? You can have 2,000 rupee notes, one 500 rupee note, that is 2,500, one, let's say 50 rupee note, that is 2,550, one 10 rupee note, one 5 rupee coin, and maybe two 2 rupee coins. Somehow with different things, you still can pay the same amount of money. Yes, there is a new 2,000 rupee note that is out there now. Little by little come into circulation. We'll wait for it. I have not physically seen, I've just seen pictures of it. I've not got one yet. There is. Okay, got one, nice. You can get one from the central bank. I have a friend in the central bank who works. You can get one from the counter. I tell her I can get one for me, but yeah, okay, that's divisibility lamai. And then the next thing is money is lamai portable. Portable means lamai it's easy to carry around, easy to carry and move. Right, so you can take it here and there. It's not hard now compared to, let's say, lamai earlier when you had barter system. What's the barter system? In the barter system, lamai you had goods for goods. It's very difficult to move around. It's all of that is there. So here it's very portable, right? It's very easy to carry around in your purse. Even if you can put 100,000, 25,000 rupee notes, no issue. You can easily carry it around. And then we also say, Lamai, another good characteristic of money is stability of value. Money has, Lamai, stable value. Now, 1,000 rupees yesterday is worth 1,000 rupees today also. But can you tell me this story, Lamai? When do you think money will lose this feature of stability of value? When does this change? During inflation, right? When prices start increasing rapidly, that stability of value thing is no longer there. Now, have you all seen, Lamai, have you all seen these examples of money being carried around in wheelbarrows and all? In countries like Zimbabwe and all, you all will see this. Zimbabwe, Venezuela, they've had very high levels of inflation. I'll show you a picture also later on. At crazy levels of inflation. For example, to buy a loaf of bread, Lama, you have to spend, let's say, 1 million, 2 million. So in situations like that, where you have crazy levels of inflation, Lama, money loses its feature of stability of value. Right? So stability of value again, Lama, is where the value of your money. Right now, for example, what you can buy from 1,000 rupees yesterday is the same that you can buy today. So your value of your money is stable. Right? Even let's say 6 months later, that 1,000 rupee will be of same value. But if you have very crazy levels of inflation, then you can't get that done. So that's the thing. And that is stable. Bangladesh, no, Bangladesh is not that bad. Okay. So then inflation and all, we'll talk about it, right? So inflation and all, we'll talk about it in the next section. I'm not talking too much about it. Then we have legal validity. So legal validity and money is legally valid to pay for any transaction. No one can even reject it. Right? No one can say, nah, I don't want money. You pay by card, will you give me a check? Now, card and check and all, they can reject. Now, for example, if you come to pay your classes with a check, I will say, nah, sorry, I don't accept checks. You have to pay money. So checks you can, right? It's a legal, you can reject. But money is legal tender, Lamai. You can't reject money. So now, even if you come and pay your class fees with, let's say, 10 rupee coins, I can't say, no, give me 1,000 rupee notes. I don't take 10 rupee coins. I can't say that. It's legally valid. You can pay. Right? So you can even pay it with, let's say, 10 rupee coins or 20 rupee notes you can pay. I can't reject. That's legal tender, yes. I can't say, nah, I want 1,000 rupee notes. So it's legally valid. That's legal tender. You can't reject money, Lamai. Then, difficult to counterfeit. What does this mean? What does difficult to counterfeit mean, Lamai? It's very difficult to make fake money, right? Imitate. Now, it's not like, Lama, now can I just put a 1,000 rupee note in a photocopy machine and take that like that? Can I do that? I can't do that, Lama. Maybe you can. There could be different ways, but it's not easy, right? It's very difficult to counterfeit. So you can't just put a photocopy a 100 rupee note and get as money. Finding that proper material, the different security codes that is there. So sometimes if you go and put in the bank and if they run it in that machine, it gets rejected. So it's not easy to counterfeit money. And what do you think is, Lama, the world's most difficult currency note to counterfeit? Which one? So we have so many currencies in the world. Which note? Black money is different. Black money is not fake. The one that is the most difficult to counterfeit is the US dollar. Which US dollar? The $100 note. So US dollar maximum is only 100, Lama. You don't have more than that. So the $100 US dollar note is the most difficult to counterfeit. Others also could be difficult, but the most difficult is the $100 note. So there is so much of security features there, Lama. There are security features that the public doesn't even know. So now, have you all seen, Lama, even in our notes, you have security features. Have you all seen, Lama, if you hold a note to the product, if you hold the note to the light wage, you see like a picture in the middle. Have you all, I know you all have realized that different stuff, right? You have these codes, all of that is there. So there is so much of security. There are features that is not even revealed to the public. So without knowing the features, how are you going to counterfeit it? Right. So no, US dollar maximum is 100. There is no $500 note. Maximum is a $100 note that you have. Okay. So those are the characteristics. So there were some questions once again in terms of divisibility. What is divisibility? Divisibility means that with money, you can even pay any amount. Money is divisible. You will have a 1,000 rupee note, 500, 100, 50, 20, 10, 5, 2, 1. So any amount you can pay. That's divisibility. And then what is stability of value? Stability value means the value of money being stable. What you can buy with 1,000 rupees today should be similar to what you can buy with 1,000 rupees a week later. But when there is very high levels of inflation, then that stability of value gets questioned. Counterfeit is being able to replicate. Having fake money is what you call counterfeit. Durability means that money is durable. It doesn't like, let's say, just because it gets wet or something, it's not going to break or get torn or anything like that. Okay. So those are the characteristics of money, Lamai. Very basic things. Don't memorize anything. Just understand the points. No, gold is not money. When you say money here, we're talking about notes and coins, right? There are types of money we will learn. But here in general, when I talk about money, I'm talking about the notes and coins that is there. Yeah, legal tender, legal validity, same thing. Then after we looked at the characteristics, it is tested, but not a very big area, right? So next we go into the functions of money. Now, this is something that you all have kind of learned maybe even during O levels or even different places. Yes, if you have a bit of damaged money, you can give it to the bank and replace, no problem. So what are the functions of money, Lama? You all know money has 4 functions. So what are the 4 functions that money has? One is money acts as a medium of exchange. That is the main function of money, as a medium of exchange. What is it? We'll learn. Second one is money acting as a store of value, or we can say store of wealth. Third one, as a unit of account, or that's what we say, a measure of value. And we have as a standard of deferred pay. So now what we'll do is we'll learn these 4 functions. So quickly, let's go through this, starting with the first one. Money acting as a medium of exchange. That is the main function, and that's the easy function. What does medium of exchange mean? That means when you're doing a certain transaction, yeah, they printed 2,000 rupee note. I also haven't physically seen it yet. You will get hopefully at some point. So this money acting as a medium of exchange, in exchange for any good and service, you can give money. Now, for example, for you all to come to this class, get the tute, register for the month, to get the service, you have to pay money. That is what I call them a medium of exchange. So in return for getting goods and services, you can pay money. In exchange for goods and services, you pay money. That's what you call medium of exchange. So here we say here, as a medium of exchange, money acts as an intermediary when exchanging goods and services and production factors. So even if you, let's say, for example, provide your labor, and you get wages. So even if you provide goods and services, even your factors, you get money in return. And then here is unlike in barter system. This story I touched a little bit about Lamai in unit number 1 also. How did money facilitate specialization and division of labor? I'll quickly touch upon this story again. So this story, now if you all remember, let me go to my note. This is the batch. So if you all remember Lama, earlier, before money came into play, what did people do? How did all these transactions happen? It happened using the what system? The barter system. So in this barter system, Lamai, what did people do? In this barter system, people were Lamai exchanging goods for goods, no? So when you exchange goods for goods, do you all remember, Lamai? There were so many problems in this. And do you all remember the difficulties in the barter system? You all would have learned in, let's say, O levels. Difficulties. Remember, one is you need the double coincidence of wants. At what you want, the other person should also want. Right? What you should want, what they have, they should want what you have. Amaru him exchange karana, right? So you had that double coincidence problem, right? So I'm not going to talk too much about that double coincidence problem. You had storage issues, right? You had storage problems. You had Lamai divisibility problems. So there were so many issues, right? Measuring problems, and different issues were there. So as a result of this, Lamai, do you think it was easy to trade because of all of these, right? Double coincidence of wants. You don't have to know that, that is O levels. I already learned that. So it's not easy to trade, very difficult to trade. So all of this made what? It made it difficult to trade. So now, in a situation like this, Lamai, did people specialize when it's very difficult to trade and all? Do people specialize, Lamai? For example, will I only grow vegetables? Will I specialize in growing vegetables and then take my vegetables and try to sell it and get my other stuff? I won't do that, right? Because it's very hard for me. If I only grow vegetables, for me to sell my vegetables and get fruits, get spices, get rice, get clothes, Amaru. So as a result of this, Lamai, what happened? Specialization was discouraged. Specialization was discouraged. People didn't like, because it's very hard, if I specialize in growing vegetables, it's very hard for me to go and exchange those vegetables, get stuff. No. So what I do is I try to do everything. I grow my vegetables, I grow my rice, I sew my clothes, let's say, I don't know, do something else also. I try to do everything on my own, because if I only cultivate vegetables, it's very hard for me to sell my extra vegetables and get clothes and rice, Amar. So what I do everything. Exactly. More direct production kind of a thing. So specialization was discouraged. You don't want to. So in a situation like this, Lamai, what was introduced now? What came into play? In this kind of a time period, you had money being introduced. So the moment money was introduced, Lamai, now what happened? Was all these problems in the barter system still there? Do you have to have double coincidence of bonds? Do you have storage issues now, divisibility issues? No, all of that got solved. So all of these problems were solved. So, and as a result, what happened, Lamai? It became very easy to trade. Now it's very easy to sell something, right? If you have extra of something, you can quickly sell it, get money. With that money, you can buy whatever you want. It became very easy to get things done. So as a result, what happened, Lamai? Now, when money was introduced, when it became easy to trade, what did people start doing now? If someone is good at sewing clothes, he spent the full day sewing clothes. He made as much as possible clothes that he can. Right? He's good at clothes. Now, full day he's cutting and sewing and doing all of it. So he made as much as possible clothes that he can. And then what did he do? He went and sold it in the market. In other words, Lamai, what is he doing now? He is doing what? Is specialization discouraged now? Earlier, when it was difficult to trade, specialization was discouraged. But now it's very easy to trade, very easy to sell your excess of. So now what happened? Specialization was encouraged. So now it's very easy. So specialization was encouraged. So that is how my money helped with specialization. Now, for example, now think about me, Lamai. Am I sewing my clothes and making my food and all? No. I am doing econ classes. I am specializing in econ classes. I do econ classes. I earn money from that. With that money, I go and get all my other stuff. I buy my clothes, my food, my everything I get from that. Now, if money was not there, then I would have done everything. I would have, made my clothes also, got my food also, done a bit of econ classes maybe if there was. So that is that situation. But now specialization gets encouraged. Now, because of this specialization being encouraged, now what started happening, Lavai? Now I am very good at, let's say, sewing clothes. So every day now I am sewing clothes. I sew. What do I start now? Now I start my own munad. I start my own clothing factory. I start my business now. Now I'm so good at making clothes. I am like a pro of making clothes now. What do I do? So along with this, Lamai, what happened? Industrialization, large scale production started. So you have now huge factories that are now starting to come. So now you have now, instead of one person doing clothes, now he has started his own clothing factory. The moment he starts his clothing factory, Lama, now think of a huge clothing factory. In a huge clothing factory out there, does one person do everything? Does one person cut the cloth, sew the cloth, put the buttons, iron the cloth, package the t-shirt? Does he do everything? No, right? What do you do now? In a large scale factory, you now start doing one other. You now start practicing division of labor. You break the huge production process into smaller parts. Now, in this big factory, a cutting department, there is a sewing department, there is a buttoning department, ironing department, packaging department. So you break it into small processes, and one person does one small thing. And that also further then encourages specialization also. So that is where, because of this, you now have division of labor. So this is, all of this happens, Lamai, because of what? Because of money. So they can ask you a question in your paper. They can ask you, how does money facilitate specialization and division of labor? You have to write this story. So the story I have given, Lama, in the note. I am not a fan of reading the note. You can read the note on your own. But this is the story. So you need to say, look here, just to summarize that in a minute, you need to say, before money was introduced, people exchanged goods for goods. That was called the barter system. But in this barter system, there was so much of difficulties. So as a result, it was very difficult to trade. So no one wanted to specialize because of that. It's very hard. No? So in a situation like that, money was introduced. When money was introduced, all those problems in the barter system got solved. It became very easy to trade. Then what did people do? They started specializing in what they are good at. That led to what? That led to large scale production. People now started making in big scales. And in these large scale factories, what did you have? Division of labor being practiced. So that can be a MCQ, can be a paper 2 question as well. Okay. So it can even be in unit number 1. It can even be in unit number 7. Anywhere they can test this whole story. Okay. Right. So that story is there. If you want, you can get a screenshot, Lamai, just to make a note out of it. But this whole thing, what I've explained here, is there in that paragraph in your tute. Okay. So then with that, we will move back the tip. So all of this lamai comes under this medium of exchange story, right? So given that money is there as a medium of exchange, it's very easy to trade then specialization and all of that happens. Moving back to our unit number 7. So this part is what I just explained, lamai, whatever that is there in the box. So after business, because when you start large scale factories, you don't do the entire thing in one factory. Like if you have a huge clothing factory, one person doesn't do everything. No, you break it down into small parts. That's where division of labor comes. Okay. Okay. Then going to the second one. The second function of money is lamai, where money functions as a store of value. That's also very easy. Store of value can lamai, you can save money and keep. Right? You can save money and keep for what purpose? To use later. Now, that was not the case now earlier. Now, before money, when you had different other things, and let's say different food items, different, let's say animals, you can't store and keep and use later, something would have happened. But that is not the story with money. So money, you can store and keep, you can save and keep. Now, you can put money in a till, you can put money in a safe, you can put it in your almirah, or even you can put it in, let's say, in a bank. You can save it and keep and use it later. That is what you call a store of value. You can store your value in the form of money and keep. So use of money to store value for future needs without risk and difficulty is known as store of value. Now, earlier, when you take goods, see, all those storage problems arise when they have a goods. So they have a perishability issues. No? Now, if you take, let's say, for example, food, before money came in, right? Food, let's say vegetables, you can't store and keep. The 1 week later, food has got rot. But එහෙම issue එකක් නැහැ with money. With money, you can store it and keep. So people like to keep money with them because it's perfectly liquid. What is liquidity? Liquidity is how easily you can convert something into cash without incurring a loss. Now tell me this, Lama. If you take property, is property liquid? Property, or let's say a house, is it liquid? Can you easily convert a house into cash? Can you, for example, if I want to sell my house today, can I sell it tomorrow? No. It might take, let's say, 2-3 months for me to sell my house. So it's not liquid. It's less liquid. But let's say, for example, think of money in my savings account. Is that liquid? Is that liquid? That is right. So if you can easily convert something into cash, that is what you call liquid. So money in your savings account, tomorrow I can go and withdraw and come. Right. So then money itself is what? Your notes and coins itself, we call it perfectly liquid because it is already in the form of cash. There is nothing more to convert. So we say money itself is perfectly liquid. It's already in the form of cash. Let's say things like money in your savings account, they're highly liquid. You can soon convert. But things like, for example, fixed deposit is also somewhat liquid, not very bad. But things like, for example, something like your property, that is very low levels of liquidity. So people like to keep money with them. Why? Because it's perfectly liquid, because you can easily convert it into, not convert into cash, because it's already cash. You can easily even directly use it for your day-to-day transactions. Checks are also very high liquid. You can even consider almost perfectly liquid. Okay, we'll go to that in terms of types of money. Gold also is okay, but not the most liquid, but maybe in a day or two you can sell. Right. Store of value is that. So far we did 2 functions: medium of exchange, store of value. The third function is lamai, money acting as a unit of account. Unit of account can lamai, something that you can use to measure. Right. Now with money lamai, you can measure the value of something. Now just think, if I ask you how much is this class worth, how can you tell me something? You can tell me based on the class fees you pay, you can say, this class is worth 3,000 rupees. If I ask you how much is the latest iPhone worth, how are you going to give me a value? Just imagine in a world without money. Think of a world that there is nothing called money. If it's a world like that, Lamaya, how do you measure the value of something? How do you say One phone is worth, are you going to say one phone is worth 10 apples? How are you going to give? So with money, the most important, another important feature is money acting as a unit of account, or in other words, it acts as a measure of value. So now just think, how do you think companies will make financial statements if there is no money? Yeah, right now, yes, right now a phone is worth maybe sometimes more than a scooty also. How are I going to make financial statements if there was no money? Imagine a balance sheet or profit or loss statement. No money. Sales, 10 apples. Cost of sales, 5 apples. Can you give that? So because you can measure the value of things with money, Tamailama, you have financial statement. That is where, for example, how can you calculate a country's national accounts? How can you calculate a country's GDP? Unit number 5, we learn GDP calculation. How do you do that if there is no money? So all of that is where this unit of account thing comes. So given that money acts as a unit of account, given that you can measure the value of things with money, that makes all the calculations, financial statements, GDP calculations, all of it possible. And then finally, you have money acting as a standard of deferred payment. What is that? With money, you can buy now and you can pay later. Now, some of you all also might come and, drop me a text saying, sir, I need more time to pay the class fees. Then I say, okay, right. Now, normally your class fees deadline is the 10th of the month. Some of you all, sometimes you all tell me, sir, my parents have not got the salary yet. Can I pay in 5 more days? No, I tell you, okay, fine, never mind. You come to class, pay it in 5 more days. So you can do that. And you can even buy things with installment. Now, there are certain people who buy, let's say, the latest iPhone in installment. For 5 years, they end up paying this thing. Yes, now you have Coco and Mint Pay also. So you can buy now and pay. That is standard of deferred payment. Now, think if there was no money, you can't do that. You can't pay later with goods. No. So the fact that you can pay later, right? All the credit sales, credit purchases happen because of this. That's a stand of deferred payment. Now, these functions, you all would have learned a little bit of it in business studies. You would have learned a little bit of this in O levels as well. So I'm not going into very much in detail, but just broadly have an idea. Okay. Done. Then we go into this. Again, very easy story. The what? The types of money. So now remember, what did we do so far, Lamai? We talked about what is money. We talked about the characteristics of money. Then we talked about the functions of money. Don't confuse my characteristics with functions. Huh? If they ask you what are the characteristics of good money, then you write durability, portability, difficult to counterfeit, you write those. If they ask for functions of money, you have to give this, act as a medium of exchange, store of value. All of that is what you talk about. It is interesting. You still not come to the interesting part. This is still the very basics and basics. This part is actually very boring for me to teach. I'm not a fan of, teaching this very easy stuff. I usually don't like that. This good money and good currency. So if you don't have those characteristics, then that money is not really good. Okay. So do you get a whole question to explain the functions? Could get. Okay. Not that you can't. Once you get the past paper, you can have a look. Standard deferred payment you can buy now and pay later. You can defer your payment. You can buy something, let's say Coco, Pay, credit cards, installments, you buy now, you pay later. That's what it is. Okay. So then the types of money. We'll quickly go through very easy story. So types of money, one you have is currency. What is currency? Currency is the physical notes and coins. Now this is legally valid. No one can reject it now. Now, if you're paying class fees by, let's say, card, I can sometimes say no card payment. I can sometimes say, okay, no check payment. But if you're paying class fees with currency, physical notes and coins, no one can reject that. That is what you call my currency, notes and coins. Nothing to explain there. So then you have this thing called bank money. You know what is bank money? Bank money is the money that people have in demand deposits. Can you give me another name for demand deposits? They're called what accounts? Money people have in current accounts. Now, what is this difference between my current account and savings account? Now, you all don't have current accounts. So if you all have account, that is a savings account. What are these demand deposits or current accounts? So these demand deposits or current accounts are the accounts, Lamai, that you can use to issue checks. And you can issue a check with this. Now, for example, with my savings account, Lamai, I can't write a check and give you. But with current accounts, you can issue checks. So mainly, it's used by whom? Used by businesses. Now, I don't want to write checks to anyone. No, so mainly businesses are using it, and there are no interest anything you don't get for current accounts. So if you have, let's say, 100 million in a current account, you won't get interest. That is, instead of just keeping physical cash with you, because physical cash keeping with you can product risk in someone can rob and go. So you put that into a current account. In a current account, then you can write checks and give. You don't get any interest. It's not a saving. It's just that you put that in account and kept that. Against that, yes, you can get bank overdrafts. All of that is possible. But that is what you call my bank money. So bank money is the money that you have in what? In your current accounts or in your demand deposit. There is no interest there. Charge them, they don't give you interest. So I'll come to the other ones. Right? Savings account, I'll come to it. And bank money also, we say, Lama, is perfectly liquid. Because why? Because you can pay with checks too. So you don't have to convert to cash and all. You can pay with check. So we say it is perfectly liquid. The biggest benefit of this current account is, Lama, because you can have checks. So you don't have to withdraw money or anything. You can make your transactions with checks. That is the biggest advantage. That's why people keep money in current accounts instead of, let's say, putting their money into, let's say, a savings deposit. So bank participate the benefit. So they get bank charges. They get all of that. Okay. And they can use that money to give loans also. Then coming in this now, your savings account and all story Lama will be answered here. That is near money. So what is near money? Near money is the money that is highly liquid. What does highly liquid mean? You can easily convert into cash. The money that is highly liquid that we use as a store of value, but it does not perform the function of a medium of exchange. Let me explain the story to you. Take this, Willame. For example, take a fixed deposit. Now, some of you all asked me that also. Now, let's say I have put my money in a 3-month fixed deposit. Can I withdraw my money easily? Is it highly liquid? Usually 3-month deposit in 3 months, they tell you, but if you really want, Lama, you can go to the bank and close your fixed deposit and take the money. Yeah? That's not a problem. You will not just get the interest. Let's say I have put a 5-year fixed deposit, but let's say now I want my money now. I can go to the bank and say, okay, close my fixed deposit, give me the money. They will give Lama. But they won't give me the interest there, but I can still take my money. So is it highly liquid? Yes or no? They will cancel Lama. Unless it's like a huge, like you have, let's say 500, 600 million. If the bank doesn't have money, they'll come tomorrow. But otherwise they will give, not an issue, right? So near money, highly liquid. No, PP doesn't come in this now. Highly liquid acts as a what? Acts as a store of value. So usually why do you put money in a fixed deposit or a savings deposit? Is for what purpose? Is to save money and keep, store your money and keep, take out later. Can you go to Cargill's and pay something with your fixed deposit? Can you go to Cargill's and say, "I fixed deposit and you take 1,000"? Can you use your fixed deposit as a medium of exchange? Can you pay for goods and services with your fixed deposit? You can't, right? So that is why we say, look at the definition. Definition has to make sense now. You see, near money, I am saying highly liquid. Easily you can convert into cash, which acts as a store of value. You put money into a savings deposit or fixed deposit, you save money again, but does not act as a medium of exchange. You can't really go and pay anything with this. So examples like what, Lamai? Your fixed deposits, your savings deposits, treasury bills, exchange bills, promissory notes. You don't have to know individually what these are, but that is what you call niyama. How come it's high liquid? High liquid kiyana you can easily convert into cash. You can't pay with your fixed deposit, but you can go and withdraw your money from the fixed deposit and pay. So it's highly liquid there. So your debit card and saving deposits are two different things. And we'll come to cards later. That's money substitutes. So near money, remember, near money does not act as a medium of exchange. It does act as a money. It does act as a store of wealth. Bank money will act as a medium of exchange because you can pay things with a check. No? So bank money will act as medium of exchange, but near money will not act as a medium of exchange. A promissory note, not very much use. A promissory note is like, for example, you write a note and give, promising that, okay, in 1 year, I will pay you 100,000. That's like a promissory note. So then that note is worth 100,000, something like that. Okay. So perfectly liquid, it's already things you can use for transactions. It's already in the form of, let's say, cash or maybe a check. That's perfectly liquid. High liquid means you can easily convert that into cash. Now, bank money does not act as a store of value. You don't really save money and keep in a demand deposit. So bank money does not act as a store of value. It acts as a medium of exchange. Near money acts as a store of value, but does not act as a medium of exchange. Currency is perfectly liquid, correct. And then we have, so we had currency, bank money, near money, and then you have money substitutes. So money substitutes are what, Lamai? These things like debit cards and credit cards, they are called money substitutes. So instead of actually paying money, you can go and swipe your debit or credit card. Anna money substitutes. E-money is a little different, right? So cryptocurrency will go on to e-money. We'll come to that all. That is also there in the next part of the dude. So money substitutes, Lamai, we mainly consider what and what? Credit and debit cards. What's the difference between a credit and a debit card, Lamai? Both look the same. What's the difference? Different? In a debit card, you're using, Lama, you're using your own money, right? Whatever money that you have saved and kept, maybe current or savings account or whatever, what your own money is what you're using on a debit card. A credit card, promissory note 100, inflation has gone down. Yeah, still you have to pay 100. So that is not a big problem. So a credit card is where, Lamai, you take a temporary loan. At every time you go and swipe your credit card, you're taking a temporary loan from a bank. And later at the end of the month, when your credit card bill comes, you have to settle. So debit card is your own money. Exactly. It's like an asset for you, right? Your savings account money. But credit card is more like a liability. You have to pay that later. That's the difference. That is, you all learn that, Lama, in business studies. Don't worry too much about that. But have an idea. So those two are, Lama, called money substitutes. So these money substitutes, credit card, if you don't pay within a certain time, then there's interest. If you pay within a certain time, no interest. If you exceed, then you have to pay interest. So then you get a bill, Lama. At the end of the month, you get your credit card statement, like the bill. Okay. So an instrument which acts as a temporary medium of exchange. So these debit cards, credit cards, we say, act as a what? Temporary medium of exchange. And does not act as a store of value. It doesn't act as a store of value. You can't save money and keep in a debit or credit. You can save money in a savings account. Savings account is store of value. Your debit card is not store of value. Debit card is just the instrument, just a plastic card for you to do some transactions. So it's a temporary medium of exchange. Does not act as a store of value. Doesn't do anything there. India government said 500 rupees not valid. At certain times, they cancel certain things. Why is a temporary thing now? Because usually the final transaction doesn't happen based on this. So right now you swipe your card, temporarily you do it, but actually the money goes out from your savings account. That's why I call it temporary medium of exchange. Yes, savings accounts are connected with debit cards. No, debit cards are not connected to bank. So bank money, in definition, bank money can your demand deposits. Okay, right. Okay, so that is the types there. Then there is Lamai. There are questions on chat box. Whatever that is not connected to this part, I will take at the end. Okay. There is this part. This part, Lamai, I will do it later. Right? So we will do this later after I teach you money supply and all of that. I will come back to this. Why is credit cards not considered money? And then the next one of why are credit cards taken into money supply and debit cards are not taken? That part you will understand after I do the next part. So for now, I will skip this box. I will come back to this later. Don't worry. Okay. We'll go in this last time. That is what you call my electronic money, or we call this digital money. Now, this is where this easy cash, M cash, Bitcoins, any cryptocurrency, Bitcoin is also cryptocurrency, so any other cryptocurrencies, all of that goes under what? Under e-money, or we call it electronic money. In other words, we call it digital money. There is no physical cash. There is nothing physically that is there for you to touch and see or do anything. These are all digital things that are there. So money stored with the use of an electronic system and make transactions with the use of software is what you call electronic money. There is no physical cash. So cryptocurrencies, Lama, you have, I don't know how to define what a cryptocurrency is, but these Bitcoins, you have so much of thousands and thousands of different cryptocurrencies. It's like a currency, but it's a digital currency. You don't have actual physical notes and coins for this. Right, that is electronic or digital money. So let me just summarize the whole story again. These are very basic part. That's why I'm going a little faster. These are not the first time that you are hearing this. Yes. You have heard about electronic money. You have heard about currency, bank money before. So I'm also with the impression that you have that basic idea. I'm going a little faster. I will go much more in detail than this. So just to digital money store value, it could function. Okay. What is binomial? Binomial, I think. Okay, I'm not very sure I saw that word. Okay. So just to summarize once again, we're talking about the types of money. What are the types of money we are looking at? Currency, that is physical notes and coins. Then we have bank money. That is the money that you have in your demand deposits, your checks and all. Checks and all, you will not take as, you don't have to take as money subject. You can consider as bank money, demand deposits. If you want, you can take a check itself as money subject, but demand deposits will be bank money. Your savings account, fixed deposits, treasury bills and all, those are near money. Then you have money substitutes, debit cards, credit cards. And then you have e-money, electronic money. This easy cash, M cash, cryptocurrencies, all of those are digital electronic. Bitcoin is a type of cryptocurrency. Bitcoin is the main cryptocurrency that you have. Smart cards and all, yes, you can take that as money substitutes. Debit cards, you can have debit cards against your money in your current account or even your savings account. For that money, you can get a debit card. Digital money you can use as a medium of exchange, but it will not be widely accepted. Not everyone will accept. Now, for example, I have got some messages. Someone asked me once, so do I take class fees from Easy Cash? So I said, no, I don't take class fees from Easy Cash. I told you can either deposit to my bank account or I have given a card payment option. You can pay through the card. Easy Cash net. So you can use for transactions, but it will not be widely accepted everywhere. 5,000 notes will be cancelled in future. I don't think Sri Lankan 5,000 will be there. Okay, right. So then that part is done. All of that, Lamai, is very basic story until what we did now. All of this you have learned before. Characteristics of money, functions of money, types of money, nothing new. And I almost think, me mara lazy unit that is done. All what you know now is done. From now on, you're going to learn the things that you don't know. Okay. You'll want a small break to walk around. So I want to do Lamai until the end of page number 5 today. So I need around another 45 minutes there. So remember, Lamai, now the class will go until around 10. Okay. Because otherwise we can't finish. So no pain, no gain. I'm also tired. I know you're all also tired. Okay, so we take a 5-minute break just to walk around, get some water. By around 9:45ish, I'll finish. Okay. Right. So not long. I'm gonna get some water and come back. So take a break until 9:10 and come back. We will start demand for money. This is where you actually learn something new. Take a break and come. Right. So we'll now start, Lamai, with this new part called demand for money. Now, this is where you're actually going to learn something new. Now, until this, it was very boring. All things that you all knew, money, characteristics, all of that is what there is. To understand why credit cards are not accepted as money, because I never taught you that part. I told you I'll skip that part and I will come back later to that. So please stay in this world. Okay. So coming into my demand for money. Now, what is demand for money? Demand is something you all would have learned in unit number 2, right? That demand and this demand is completely different. Even if you don't know unit number 2, don't worry. So demand for money is Lamai. Listen carefully. How much of money people want to keep with them in the form of money itself? What does that mean? Now, when I say in the form of money itself, means in the form of notes and coins, not put money in the bank or buy property and keep, or not that. How much of money people are willing to keep with them in the form of money itself. That means in the form of notes and coins itself. Now, for example, I will keep some amount of money in my purse. Some amount of money might be there in my almirah. Some amount of money, let's say I keep in a till. So how much of money people are willing to keep with them in the form of money itself is what you call demand for money. Not the money that you put in the bank account or not the money you put in the share market. How much of money you keep physically as notes and coins in the perfect liquid state. Yes. How much of money you are willing to keep with you in the form of cash. That is what demand for money is. So I'll go through the definition. They're saying the preference of people to keep money in the form of money itself. The preference of people to keep money in the form of money itself is called demand for money, or another name for this is like liquidity preference. How much of money people are willing to keep in the form of money itself. That is called demand for money. Can you tell me, Lamai, why do you demand for money? Can you tell me why do you keep money in the form of money itself? Now, why can't you put all your money in a bank account and keep? Why can't you put all your money in the share market and keep? Why do you actually keep some notes and coins in your purse or in your pocket? Or why do you keep? You can put all the money in the bank and keep them. Cash rolling. Why are you keeping? Why are you demanding for money? Exactly. One reason that you demand for money, Lamai, is the transaction motive. For your day-to-day transactions, may bus eකට ගෙවන්න to buy something, for your day-to-day money transactions, you need money, right? That is why you keep money with you. We'll go into detail, don't worry. Another reason that you keep money is Lamai for any emergency, precautionary. Let's say something happens. ඒකට emergency වල පොඩ්ඩක් සල්ලි තියන් ඉන්න. And finally, you have Lamai for speculative motives. Speculative can Lamai for like future investments. Like if a good investment opportunity comes, taggal to use your money and do that. So those are the 3 reasons why people demand for money. So now what we'll do is Lamai, we'll learn these reasons in detail. So once again, if you join late, summary, what is demand for money? Demand for money is Lamai, how much of money people are willing to keep with them in the form of money itself. How much of money are you willing to keep in the form of money itself? I mean, in the form of notes and coins itself, how much of money are you willing to keep? Not the money you put in the bank account or share market or anyway. How much of money you're willing to keep in the form of money itself. That is what you call demand for money. Another name for this is called liquidity preference. So then I asked you, why do you demand for money? Why do you keep money in the form of money? 3 reasons. One is for your day-to-day transactions, to pay your bus fare, pay this one, pay that one. You have money. That is transaction motive. Second one is the precautionary motive for any emergence. And then you have the speculative motive, that is for any investment opportunities. Now what we'll do is these three reasons we'll learn in detail. Yes, we'll talk about the PayPal stuff also. So coming into the first one, transaction motive. Now, Lamai, why do people keep money with them for their day-to-day transactions? Because there is a gap. No, there is a gap between when you receive your income and when you have to make your expenses. Now, usually people receive income, my salary, you get once a month. No? If you're working for a company, they won't pay you every day. Salary, let's say, comes on the 25th of the month. Okay. Salary comes on the what? Let's say 25th of the month. So you get income only once a month. But your expenses don't happen once a month. This all your expenses happen on the 25th of the month. No. Your expenses lamai happen on a daily basis. No? So there is a gap there, right? Income in once a month. Expenses happen daily. So to cover your daily expenses, then you have to keep some money. Bank share market. If you go put your money there, then how are you going to cover your daily expenses? So here see, since there is a gap between the person's income received and expenditure made, there is a gap. No, you're receiving income only once a month, expenditure is every day. Holding of money balances for day-to-day transactions, paying the bus fare, buying your food, paying electricity, paying class fees for your day-to-day transactions. You're keeping money with you is what you call transaction demand for money. Now I'll ask you another question. In my purse, for my day-to-day transactions, I have a 10,000 rupees. So I am demanding 10,000 rupees for my day-to-day transaction. Example. How much do you have in your purse? I don't think you have 10,000 you carry to school and go every day, boys, or maybe even girls. Let's say 500 rupees max, right? Or let's say 200 or 300 rupees. Can you tell me how come I am keeping 10,000 rupees for my day-to-day transactions, but you're keeping only 500 rupees? The amount of money you keep for your day-to-day transactions depends on your what? Depends on your income, right? I might be earning much more than what you are earning. Your earning is only your pocket money, right? You all would have calculated my income also, multiplying the students by the class fees. Yeah. So that is my income. So when my income is higher, obviously I will have bigger expenses. Let's say you go by bus. Let's say I will go by Big Me. Let's say you buy vegetable rice and curry. I will buy, let's say, biryani. I have high income, so I will buy good things. Let's say. So amount of money people keep for their day-to-day transactions, that is transaction motive of demand, depends on their income. People with very low levels of income will keep very little money. Now, think of a poor person. No, poor again, not you. Think of a poor person. Maybe you can even think of you if you want. So let's say, now this is income. This is demand for money. So let's say there is a poor person who is earning only 10,000 a month. His income is only 10,000. So for his day-to-day transactions, let's say in his purse, he is keeping, let's say, 500 rupees. For his day-to-day transactions, he is keeping 500. Let's say there is a rich person. There is a rich person earning 500,000 a month. So he is keeping, let's say, 10,000 in his purse for his day-to-day transaction. MTD is money demand for transaction motive. So the amount of money that people keep for their transactions, for their day-to-day transactions, depends on what? depends on their income, or you can say disposable income. There is a what type of a relationship between lamai income and demand for money under transaction? Is there a positive or direct relationship or indirect negative relationship? There is a what relationship? There is a positive relationship, positive, or we can call it a direct relationship. When your income increases, the amount of money you keep for your day-to-day transactions will be high. Yeah, if person is stingy, that's a different story. We're talking about normal fellow, right? So if you are earning more and more, you keep more and more money for your day-to-day transactions, right? In your purse, you will have 10,000. But if you are a poor fellow, you might, let's say, only have 500. And demand for money under what? Is based on your income. There are so many other factors that can also affect it, but the main one is your income. So here I'll read it. Demand for money on transaction motive mainly depends on. That means there are other things also that it depends on. It mainly depends on a person's income. That's clear, Nilamai. So there is a positive relationship that exists between income and demand for money. So when your income increases, you will keep more and more money with you for your day-to-day transactions. And that is how I am showing this in the graph. You have a positive sloping graph. Income in the horizontal axis, demand for money in the transaction motive in the vertical axis. The more and more your income rises, your demand for money will go. And then, does demand for money lamai only depend on income? This amount of money you keep for your day-to-day transactions, does it only depend on your income? Y is a function, yes, function. No. It depends on, yes, your expenses are also there. But in addition to income, Lamai, it also depends on so many other things. It depends on your interest rates. Now, for example, now think, Lamai, if interest rates are very high, think if you put money in a bank account, you're getting 30% interest. Will you keep money in your purse then? Will you keep money in your purse for your day-to-day transactions? No. As much as possible, you will try to put in the bank, no? You will try to put in the bank and earn interest from that. So then when interest are high, Lama, your demand for money is very low. You're not keeping money with you. And we'll go into those factors also later, don't worry. And then even think of this, Lama, price level, general price level. I'll give you a good example. Okay. Think of you 5 years ago and now, before the economic crisis and after the economic crisis. Earlier, when you're going to school, Lamai, how much did your mother or father give you as pocket money? Money supply is different now. We'll talk about money supply later. Earlier, when you're going to school, 50 rupees. Let's say you're someone going by bus or something and coming. Max 100. Earlier, if you're going to school, now this is 2019. Let's say 2019, which grade were you in? Grade 5, grade 6, 7? 7 came. So you would have got, let's say, Lama, in 2019, you would have got, let's say, around 50 to 100 rupees max. So in your purse, you only have 50 to 100 rupees bus fare. Now I remember this, Lama, because at that point is where I was going to university. And in 2019 is where I started going to uni. I told you all, right, in Colombo Uni and all, in university, Lama, it's very cheap. Right? So plain tea was only 5 rupees. Lunch was only, let's say, 30 rupees. You can buy a vegetable rice and curry. If you get fish, it's 50 rupees. You have kottu roti in the evening, 30 rupees. And those were the prices, right? In university, canteen. So in a day, you can survive easily. Now it's still cheaper than other places, but comparatively little expensive than what it was. With 100 rupees, you can survive an entire day. Not the most tastiest shape. Fried rice biryani, manageable. Right? I won't say it's bad. I won't say it's good also. Medium. For 100 rupees, you can survive a day. That is more than enough. But then, now, Lamai, after the economic crisis, when the price level increased, now earlier I would have gone to university with just 100 rupees in my purse. Entire day for my transactions, 100 rupees is enough. Now, let's say after A-levels, now if you all are going into uni, Lama, you all will start uni in 2020. Now, this is 25, no? 26, 27. So when you're going to university, Lama, in 2027, do you think in your purse, you will keep only 100 rupees? Can you survive with 100 rupees in 2027? Let's say you also go to Colombo Uni Management faculty. I doubt. I feel at least, let's say, a 500 rupees or maybe 1,000 rupees, you might know. Even think of the money that you're taking to school now. In grade 7, you took 50 rupees or 100 rupees to school. Now, how much are you taking to school? Does your mother give you only 50 rupees to buy a tiffin from the canteen and go by bus and all? No. At least they must be giving you around 300, 400 rupees now. So what has happened? When the prices increase, exactly, with the bus itself, you might pay around 100. So when the prices increase, Lamai, the demand for money also increases. Because now you have to keep more money with you because otherwise you can't. Earlier, in 2019, just you were demanding only 100 rupees. You were only keeping 100 rupees in the form of cash in your purse. But now when you're going to school, you're keeping 300 rupees. So now you're keeping more money with you. Why? Now things are expensive. Prices have increased. So that also affects your demand for money. The price level also affects demand for money. And then another thing that affects demand for money is the innovations in the financial system. Now, some people, one person gave me a good example about India and PayPal. We'll forget about PayPal in India. I'll give you a simple innovation. Debit cards. 20 years ago, debit card was not a thing, no, 20 years ago. When your father gets his salary, his entire salary he will take and come and keep in the Almera. Yeah. Because if he keeps it in the bank, and every day to withdraw money, bank account එකට ගිහිල්ලා withdrawal slip එක fill කරලා, you have to take very hard. So if he gets his salary, entire thing he will keep in his Almera. So 20 years ago, demand for money is very high. You keep a lot of money in your Almera in the form of cash. But now, do you think, Lamai, when your father gets his salary, the entire salary is in Almera? Do you think he puts in the Almera and keep it? No, right? Now, majority of it might go into a bank, no? Why? Because now you have debit cards. You have all of that. So now, even if you want to, let's say, make a transaction, you can easily go and swipe your debit card. You don't have to keep cash. Now, there are so many days in my purse, I might not even have 100 rupees in my purse. So my demand for money is less than 100. But I openly go out with my friends, buy another, I go out. Why? Why is my demand for money so low? Because I have a debit card with me. So the more and more innovations, online banking, debit cards, ATMs, PayPal, Ara card, May card, right? With all of those innovations coming in, Lamai, that also reduces your demand for money. So higher the innovations, more and more innovations you will see, demand for money will come down. Back 20 years ago, people would have kept so much of money with them. Now they are not keeping because now you have debit cards and all. So those also affect Lamai debit for us. So then there are some institutional factors. Institutional factors like, for example, how banks operate, not very important. There are some factors like that as well. Just have in mind. So once again, summarizing my story. Listen carefully, understand this practical. Please don't memorize econ. You memorize econ, you will forget. Now you memorize this dude, next week you have forgotten. Logically understand, remember this like a story with the stories that I'm telling you. So once again, what is demand for money? Demand for money is how much of money people are keeping with them in the form of money itself, in the form of cash, physical cash. How much are you keeping? Where are you keeping? Maybe in your purse, maybe in your Almera, maybe in your till, we don't care, but you're keeping in the form of cash. Not bank or share market or gold or away, in the form of cash. Why do people keep money? One, transaction motive. For their day-to-day transactions, people get income at the end of the month. Expenses happen every day. So you have to keep some money with you. What does the amount of money you keep for your day-to-day transactions depends on your what? Mainly depends on your income. When your income increases, you keep more and more money for your day-to-day transactions. But not just income, there are other things as well. Like, for example, interest rates, uh, price levels, innovations, those also affect your demand for money. Is that part fine, Lamai? Transaction motive, demand for money. Certain. Done. Then the next reason that you demand for money. Why else? Yes, interest we'll talk about in the next part also. Don't worry, interest. Okay. Institutional factors now, that's for example, how banks operate, different things. Not very important. Don't worry. So next one is for precautionary motive. Now, what is precautionary motive? This is the money that you keep with you, Lamai, for an emergency, for any unexpected situation. How many of y'all, Lamai, have money in a side pocket in your purse? Not in the main money area. In a small area, you have put some money and kept. Maybe sometimes some money in your bag, small pocket you have kept. Some of you all have money in behind your back cover, phone. Yes. Is that the money for your day-to-day transactions? Your day-to-day transaction money, do you put in that side pocket in the purse and keep? No, right? That is for what? That is for any emergency, in case something happens. How many of your mother would have given you money in case bus strike come in a 3-wheel? Have they given you some money like that 10K? In case something happens, 200 rupees or 500 rupees for this. They would have given some money and kept, right? What is that? That is your demanding money, not for your day-to-day transactions. That is for any emergency. So maybe, for example, you might fall sick. Sometimes, I might keep some money with me in case, what if I face an accident? What if my car goes and knocks? Under to make my car, I should keep some money. Maybe let's say if there's a bus strike, okay, I need to come by 3-wheel. So money that you keep, Lamai, for your emergency purposes, that is what you call demand for money under precautionary motive. So you keep money for emergency purposes. Can you tell me the amount of money, exactly, unexpected ones, the amount of money that you keep for your emergency purpose or for this precautionary motive will depend on your what? This will also, Lamai, depend on your income. Now think of a poor person. Do you think, Lamai, a very poor person will have that much of money for precaution? Will he have 1,000 rupees or 5,000 rupees in his hidden pocket inside his wallet? No. A rich person might. So demand for money under precaution, that is for emergency purpose, you're keeping money with you. That also depends on what? That also depends on my income. And that also has a what? A positive relationship. So when you're a very poor person earning only 10,000 a month, you might, let's say, only have 100 rupees precaution. But if you are a person earning 500,000 a month, maybe for precautionary, you have 5,000 rupees inside your wallet, hidden and kept in the small section. On the precautionary motive, the graph is exactly the same as the previous one. That is the second reason. That's very easy. So once again, one reason people keep money with them is for their day-to-day transactions. Mainly depends on income. Another reason people demand for money or people keep money with the cash with them is for what? For any emergency, any unexpected situation, bus strike, car accident, fallen sick. So for any unexpected things, you keep money with you. That is precautionary motive. That also depends on what? On your income. There is a positive relationship. Clear? Yeah. Then we come to the last one. Demand for money under the speculative motive. Now, this is a little hard than the first two, but not very hard. So with this, we are done with the class today. We can then go into the quiz. So listen carefully. Demand for money under speculative motive, or we also call this, Lamai, the asset demand for money. Another name for this is asset demand for money. So let me explain this to you, Lamai, in very simple words. Okay. This is the money. Now, you all can, Lamai, jot things down at the bottom of page number 5. I'll just draw some things on my screen. You can use this space to write things down. So I'll go to my screen. This demand for money, Lamai, under the speculative motive actually depends on interest rates. Depends on what? Interest rates. So in an economy, now when I say interest rates, Lamai, bank interest rates, or all different types of interest rates. Okay. So this one, there is a bit of finance part involved, which you all don't have to know how it works, but I'll show you. When interest rates in a country increases, now let's say interest rates that were 5%, 10% has now become 20%. When interest rates increase, Lamai, one thing, this is a bit of finance. Why does it happen logically? You don't have to know, Lamai. I'm also not going to teach you that. Don't worry. So when interest rates increase, prices of bonds, right? Now, let's say treasury bonds, corporate bonds, right? Prices of bonds come down. Now, what are these bonds, Lamai? For example, think of that is like a financial instrument where you can invest your money and keep. So interest rates and prices of bonds have a negative relationship. How is it a negative relationship? Why does it happen? That is, you all will learn in finance if you all do a finance related degree. That part, they will not ask you for A levels. You don't have to know. You just need to know that interest rates and price of bonds have a negative relationship. For you, Lamai, think of a bond like a share value. Now, think of bonds like share prices. If you're an investor, how do you make money from shares, Lamai? If you're an investor, you buy shares. Okay, dividends is one. How do you make a capital gain? You buy shares at a lower price and sell it at a higher price. No, for example, you buy a share at 50 rupees, sell it at 60 rupees. That's how you make a profit. So then think of these bonds also like that, Will. When the price of bonds have come down, will you buy or will you sell, Lamai? Now, bonds are cheap in the market. What will you do now? Think of it like shares, Will. If share prices have come down, what will you do? You will taggala buy, no, why? Then later you can sell, no, later sell kalla profit tak hoya ganna pula. So when bond prices come down, what happens, Lamai? People buy bonds. Anna you saw mara opportunity kak bond prices are very cheap. Why does bond prices come down? Now, that part is what I told you. You don't have to know that. Okay, so don't worry about that. Why interest rates increase and bond price come down? That part is finance. So when bond prices come down, Lamai, what people do is they will buy bonds. So when you buy bonds, Lamai, what happens to your demand for money? Now, let's say I have kept 100,000 with me in my Almera. Now, in my Almera, I have kept 100,000 and kept. If a good investment opportunity comes, Taggala, I will use that 100,000 and I will invest. And now there is a situation where bond prices have come down. What do? With my 100,000 in my Almera, I soon use it and buy the bond. Now, what is happening to my demand for money? The amount of money I have in the form of cash. Bond is not shares, but you can think of it as shares. What happened to the amount of money I have in the form of cash? Now, in my Almera, do I have 100,000? Demand for money increases or decreases? Decreases. Demand for money means how much of money you have in the form of cash. So demand for money comes down. So this is what happens lamai in the speculative motive. Let me summarize the story again. In a country, when interest rates increase, when you say interest rates, lamai, in general, all the interest rates, right? Savings account, loans, all the interest rates, when it increases, what will happen? Bond prices will come down. How does that happen? We don't have to know. I'm not going to teach you. You just need to know interest rates and bond prices have a negative relationship. There is a way to calculate and all. I will not show you. It will just confuse you then. It's not needed. So when interest rates increase, bond prices come down. So when bond prices are low, what do people do? That's a good time to buy Nalaman. So you buy something when the price is low. And then when the price goes up, you sell and make a profit. No? So when bond prices come down, everyone is buying the bonds now. So you're buying bonds, kiyanne. Whatever money you have kept for speculative motive, you have kept some money for investments. And a money you use karla. You use that money and you buy the bond. So demand for money then comes down. How much of money? Demand for money means how much of money you keep with you in the form of cash. So the amount of money you keep with you in the form of cash now starts coming down. No, money supply is different. Don't pull money supply. Bond is now a financial instrument. It's like, for example, a piece of paper there. Okay, that's the story. Now I'll teach you the opposite of this. Okay, now you all tell me what will happen. If interest rates in a country come down, what will happen to the price of bonds? Interest rates and price of bonds have a negative relationship. So price of bonds will increase. So if price of bonds increase, lamai, what will you do now? Let's say you're a person who has a bond now. What will you do? Now bonds are price has gone up. So now what will you do? Now it's a good opportunity for you to do what? Now if you have a bond, Tagala eka sell karanwane. Now because maybe you bought a bond 1 year ago at a lower price. Now you soon go and you sell. So people now what do? They sell bonds. So if you sell bonds, lamai, you get money. You take that money and what do? Put in your almera. What happens to the demand for money now? Demand for money is how much of money you have now in the form of cash. So how the money you have in the form of cash now starts increasing. So interest rates, now demand for money. Now this demand for money under speculative motive. So demand for money under the speculative motive, lamai, depends on interest rates. Now, demand for money for transaction motive and precautionary motive dependent on income. Demand for money under speculative motive depends on interest rates. When interest rates increase, demand for money under speculative motive will come down. When interest rate decrease, demand for money under speculative motive will increase. Interest rates decrease, price of bonds coming down. Now that story logic, you don't need to know that. So I'm not going to that part. It's a bit of a complex story there. Okay. So if this is the story, lamai, interest rates and demand for money under speculative motive has what type of a relationship? It has a negative, or in other words, we can say an indirect relationship or an inverse relationship. When interest rates increase, demand for money under speculative motive comes down. When interest rates come down, demand for money goes up. So you can take a screenshot of this if you want to copy that down under the bottom of page number 5. Right? Maybe for homework, if you all want to logically understand the story, you can do that on your own. Learn and see why when interest rates increase, why do price of bonds come down? It's not in your syllabus. They will not ask you. If you want, try to watch a YouTube video or read something, or maybe even ask ChatGPT and try to figure that out. Do we always need to keep the money in hand when we get? Yeah, so we usually keep it. So then maybe in the future, if another opportunity comes, Tagala, we will buy. So usually keep in the form of cash. So here the price of bonds increase. Why not bank accounts? Because you want to soon make use of an opportunity. In reality, you might actually keep in bank accounts, tamai, right? But here you keep in the form of cash so that soon, if another opportunity comes, you can buy. The real world Lamai can be a little bit more complex like this. There are secondary markets, new bonds, old bonds. There are so many other instruments. Then why sir only we are putting in bonds? Why can't we put in the share market? Why can't we put in a savings account? Why can't we put in a fixed deposit? Real world is much more complex than this, right? From the questions that I'm getting also, I will agree with you. But here Lamai, we are only looking at this story, right? So we are only looking at interest rates, bond story, demand for money. Assuming that none of the other options, share market කියලා එකක් නැහැ, there is nothing called fixed deposits. We are ignoring all of that only, and we are talking about this. Okay, right. So then going back to my tute. Precautionary model and positive relationship is easy now. So when your income increases, you will keep more and more money for your emergency. A poor person might, let's say, only have 100 rupees for his emergency. Rich person might be having 5,000 rupees for emergency. Okay, so this is the speculative motive story. So look at the graph for this lemon. Here, the horizontal axis, please mark it. That is interest rate, R, and this is demand for money under speculative mode. So when your interest rates are very low, let's say in your country, interest rates are only 2%, under you have very high levels of demand for money under speculative. But if your interest rates are very high, let's say interest rates are 20%, then demand for money under speculative motive is very low. So that is the story there. So I'll just read the note here. I'm saying demand for money to gain future benefits by investing on bonds is called demand for money under speculative motive. The money that you keep with you to invest probably in bonds and all of it and make a profit, that money is what you call the demand for money under speculative motive. In other words, keeping money as an asset, that's why I said asset demand for money, right, is known as demand for money speculative. People intend to keep various assets with them, and the selection between bonds and money depends on interest rates. Accordingly, there is a negative relationship between interest rates and demand for money for assets and bonds. So whatever I explained Tamai is there in this. I'm not reading the note word by word. So in this place here, you can write that story which I drew with arrows. You can jot it down. So with that, today's part is over. I'll take 1 minute to quickly give you a summary. If income increases, expense will increase. If income increases, your consumption will increase. We'll learn unit number 6. Summary. And then we'll have a quiz. The quiz is all what we learned today. Not unit number 1 to 6, just from this page number 1 to 5. Okay. So a quick summary again, and then we move to the quiz, and then the class is done. Starting with, what is money? Money is anything that is accepted as a medium of exchange, anything that you can use to make a payment. Then we looked at the characteristics of good money. We talked about acceptance, portability, divisibility, all of those. Then we talked about the functions of money. What are the functions? Acting as a medium of exchange, acting as a store of value, unit of account or measure of value, and standard of deferred payment. Then we talked about the types of money. Currency, bank money, that is demand deposits, near money, that is your savings deposits, fixed deposits, treasury bills, all of those. Money substitutes, debit and credit cards. And we talked about electronic money. This box over there, I did not discuss. I told you we will do that later. And then I went into this story called demand for money, or we call it liquidity preference. What is demand for money? The amount of money people keep with them in the form of cash itself. Why do people keep money with them in the form of cash itself? One, transaction motive for their day-to-day transaction that depends on income. Another reason people keep money with them in their, this one is for what reason? Is for precautionary motive, is for any emergence. And then another reason, Lamai, is the speculative motive. That is to make any use of any good investment opportunities that is there. The money people keep with them under speculative motive depends on what? Interest rates. There is an inverse or negative relationship. When prices increase, yes, demand for money will go up. Near money is not perfect liquid, it's highly liquid. Okay, that is the part. So now remember this, Lamai. Now, what I want you all to do is, before you come to the next class, please study this area and come. I'll share these written slides also if you don't have the tute. Study this area and come so that you know what is happening in class. Don't completely forget it and come. Okay. Positive resume, income and transaction. Income and yes, that was clear. Now maybe showed it. Okay. So let's get into the quiz now. Let me share my screen. After that, if you all have any questions, you can definitely stand clear. Yes. Precautionary motive also. Income and demand for money has a positive relationship. Okay, so coming into the quiz. Give me a second, let me load. So there will be a small prize for the winners as well. Let me load the quiz. Okay. Okay, so the quiz, Lamai, will have 15 MCQs. The first 10 MCQs have 30 seconds. And the last 5 MCQs have only 20 seconds to make it more challenging. So how to join? I will send a link on the chat box. You can click on that link and you can join. You can use a phone, you can use a laptop, you can use anything, no problem. The same device that you're on Zoom, you can use it. You can click on the link on the chat box. If not, you can go to this website, www.kahoot.it, enter the game pin. So game pin is 8504929. Enter the game pin, enter your name, and then you can join. So you can join in multiple ways, or you can even scan the QR code that is there over here. It should take you to the game from your phone. If you scan, it will open the website and take you there. That's all about. You can click on the link. You can go to the website and enter the game pin. You can scan the QR. Anything is fine. So I'll give you around 1 minute for you all to join. So already I think there is around 90 people here. The others, you can join quickly. The faster you answer, it's all MCQs. All MCQs, Lamai, have 4 options each. All of it is what we learned today. Nothing difficult, nothing hard, just today's work. That's it. From 8 o'clock, from 8:10 to 9:50 in that 1 hour, 40 minutes. Yes, I'll give a 30 more seconds. So even in the middle of the game, Lama, you can join. So in case you have a connection issue or something, the game pin is there. So you can click on the link or go to the game pin. Even after 1 or 2 questions are done also, you can join now. So think of this as just a exercise for you all to revise the thing that we did today. Faster you answer, more points you will get. Okay, so there is 130 people. I'm starting. For the ones who have not yet joined, even in the middle, you can join. Okay. Okay, so starting the quiz. Question number 1. What is the primary function of money that allows it to be used to settle a loan taken 6 months ago? Medium of exchange, standard of deferred payment, unit of account, store of value. Because of what function you can take a loan and settle it, let's say 6 months later. Focus on Lama getting the question right than, hurrying and answering and getting the wrong one, right? So it's make sure you get it right. At least don't worry about the speed. Try to get it right. Those who are not on the game, Lama, you can even send answers on the chat box. Ultimately, all what I want you all is to learn. Okay, so here the answer is standard deferred payment. Buy now, pay later. Then, okay, this is the leaderboard after one question. The link, Lama, I think it's on the this thing. Okay, let me copy and paste the link again. Okay, go into the next. The ability to easily turn a financial asset into cash without loss of value is known as portability, durability, liquidity, stability. The ability to turn something into easily into cash. What is that called? Hmm, That's called liquidity. Good. Right. So going to the next one. Leaderboard after two questions. Next one. If interest rates rise, what is the impact on speculative demand for money? It will not change, it will increase, it will become zero, it will decrease. If interest rates increase, what will happen for demand for money under the speculative motive? It will decrease. Now, remember, first 10 questions, you have 30 seconds. The last five questions, you only have 20 seconds. Huh? Now you have time, you got to speed up in the last one. Okay, next one. Which function of money is being utilized when a company uses it to calculate its profit and loss? Unit of account, standard of deferred payment, store of value, medium of exchange. I told you this. How can you make financial statements, make profit or loss because of what? Because of what function? Because the function of unit of account, right? That is where you can make all of this stuff. Okay, that's the leaderboard. Next one. Holding money to cover unplanned expenses, like a sudden medical bill, is driven by the speculative motive, transaction motive, precautionary motive, investment motive. This is the what? This is the precautionary motive. Good. Majority of you are getting it right. Nice. Question 6. The inverse relationship between interest rates and demand for money is directly associated with which motive? Transaction, both A and B, speculative, precautionary. So A and B you can take as transaction and speculative, huh? If you want. Negative is directly associated. Directly, yeah, the main one I'm asking you. It's directly associated like, with the speculative motive. Transaction motive, interest rates don't have a direct one. It's like an indirect story there. Okay, leaderboard is not changing, very tight on the top. Question 7. Which of the following is not a characteristic of near money? Acts as a store of value, functions as a direct medium of exchange, can be converted to money easily, highly liquid. Not a characteristic of near. functioning as a direct medium of exchange. Remember near money, your savings account, fixed deposit, treasury bills. Can you use your fixed deposit to pay a transaction? Can you pay class fees with your fixed deposit? No. So it doesn't perform the function of acting as a medium of exchange. Maybe you can withdraw the money and then do it, but directly you can't. So that's the one that is not. Okay, leaderboard has changed. Going to the next. The day-to-day demand for money to buy groceries and to pay for transport is primarily explained by the liquidity motive, speculative motive, transaction motive, precautionary motive. Easy one. Three seconds. As with the transaction. Okay, good. Leaderboard. Okay, next one. Which characteristic of good money is primarily challenged by high and unpredictable inflation? Stability of value, durability, divisibility, portability. When you have very high levels of inflation, which of these characteristics get challenged, or which of this, is affected? The stability of value. Good. Okay. The next one, question 10. When a business uses money to create a financial statement and accounts, which function of money is it utilized? Medium of exchange, unit of account, store of value, stand of deferred payment. We had a very similar question before also. Business is creating financial statements and which function? Exactly, unit of account. Good. So now we go to question 11 to 15 number. Remember, 11 to 15 will only have 20 seconds, making it more challenging. You have to answer faster. The board isn't changing. Next one. A treasury bill is an example of what type of monetary instrument? Currency, money substitute, bank money, near money. Near money, right? Treasury bills, savings accounts, fixed deposits are all near money. Okay, leaderboard has changed a bit. Next one. What is the primary factor affecting the demand for money for the transaction motive? The level of uncertainty, a person's income level, the interest rate, inflation rate. Primary factor affecting demand for money under transaction motive. Is the person's income level. Good. Then the next one. Which of the following best describes the relationship between interest rates and speculative demand for money? Proportional, positive, inverse, no relations. Easy one. Relationship between interest rates and speculative demand for money. There's an inverse relationship. Okay, leaderboard looks very close. Last two questions. What is the key feature distinguishing debit cards from a credit card? A debit card is used for online transactions. A debit card is a form of near money. Debit cards accesses users' own pre-deposited funds. A debit card has legal valid status. What is the key difference? Key difference is a debit card uses the owner's own money, right? So the yellow one there. Okay, what is very tough at the top. So go to the last question. Question 50. If an individual holds cash to cover emergency medical costs, which motive is he demanding? Speculative, precautionary, transaction, investment. Very easy one. Yes, now the AI generated pictures were correct. That's one. Okay, so that's the last one, precautionary motive. The questions definitely were not hard. One main reason that it was not hard is you can't really make it hard. So that area is not hard to make it hard. Right? So that's why the MCQs were also easy. When you do the past papers at one point also, you will realize the questions from that part is not hard. Okay, so with this, we'll move into the leaderboard. Let's see whom do we have. Right, so in third place with 14,101, we have Hariaka. Full name. We have Mathuri in second, and we have, I think, very close. I think everyone got all of it correct. It's just the timing. This is Shahid. We have Sajna and Rabia on fourth and fifth. I think most of you all did get a lot of it correct. So good job. For the top three, I'll give you a small prize of not a big one. Right? 1,500, 1,000, and a 500. You can claim the cash prize. It can be in the form of a reduction from your next month's class fee. So if you have not yet paid the class fees, it can be a bank transfer. It can be a reload, anything. I would prefer if it's a reduction from the next month's class fees because it's easy for me. I don't have to do any transfer. You can drop me a text to claim your prize now. Just drop me a text on WhatsApp with your name, with your place, and say how you want your prize. Cool. So good job. I'll show the top 20 as well. The session summary, the full report. So there were 154 people who played it. Oh, so there's so many people with 100 out of 100. There is, but the timing matters again. So there's so much people who have 100%. This is the top 20. So there are even people in the top 20 who have 100%. So your timing does matter. I think it was very tough because the questions also were not that hard. So good job. Congratulations. I think overall, you all are kind of okay. You all have done pretty good. This is the top 30. Okay, so far that's fine. But on your end, Lamai, please keep this same momentum going. That's what I told you at the start of the class. Consistency is very, very important. So today you did pretty well. But next week, some of you all might not even be in the class. That's a problem. So take time, go through what you did during the week, study, and then come back next week where we do the next one. Within this week, those who have not yet got your tunes, Lama, you will get your tunes. It was nice teaching all of you. For anyone who has questions, Lama, you can drop a text on WhatsApp, ideally. I will end the class since we took a little long time. You can drop a text on WhatsApp to me and keep. I will get back to you eventually. See you. Good back. Good night. And bye-bye.